What's up, everybody? It's Billy here, and I'm just going to give you all a little sneak peek of what this next workshop video is going to be about. It's going to be mostly about sector rotation, breaking down sectors, indexes, all that good stuff. What are the weights in each index? But this short little video is just going to cover today's antics. So I just want to break this down. So afterwards, come review this after and see how accurate I was, see how inaccurate I was. But again, the levels speak for themselves. But here's the daily watch list, just to kind of have an extra add-on. Kind of just put up SPY and Nasdaq today, just to give everyone a little more comfort. Threw a lot of one-liners on here: ABNB, Beyond, Roku, Disney. But we also have Neo, ZM, Amazon, ABNB, and all that. So I think I said that twice. But if you want to check out my abbreviations, you can. But also how to play the list. I have these awesome, amazing day trading tips. But another big thing, you can check pinned messages, and there's a lot more in there. So as you can see, I do not just leave people hanging. There's a review of both types of entries, all kinds of reviews, all kinds of links to plays, and all good stuff. So if you want to learn more, please click on those. If you don't want to learn more, keep ignoring this channel. But let's move on. So SPY, we had set above our 4375 or below 4350s on Nasdaq. We set above 14815 or below 14700s. Let's see why. So here on the daily time frame, we're watching big shoulders. So when it comes to the market, you want to focus on shoulders, okay? Levels that are the most important, and then you want to start tacking on your extra levels for targets and extra levels of S&R, right? So what do I mean by a shoulder? I mean about a common resistance. As you can see, as price pushed down and made a new high over here, it pushed up, came down, and sat on that exact level. In my community, we call these retests, okay? So you end up having those potential breakouts. So a good initial breakout, and then you end up getting that retest. These leads to two different types of trade opportunities. This is a very aggressive that leads to just a one direction. You don't want to be in it too long. And a lot of time this is day trading, but it works on the bigger time frames too. As you can see, very strong recovery. This leads to a lot of your better swing trades. So if you're a day trader on the smaller time frames, you're going to want to watch these types of entries. Bigger time frame, other types of entries, you're going to want to watch for these. But back to just bigger time frame analysis. Again, that was for more day trading, if anything. But that's just the kind of concept we look at things. You see that initial breakout, and then you see that retest. That is an important level of support. Let's try to see another shoulder over here, right? Price hit right here, ended up breaking out right here, holding on top with more of a rectangle look than the other time when we kind of had a retest. So you kind of have a bullish rectangle holding on top of it, and then it pushed higher, right? Now you're getting this level broken below. Okay, so what do you think the most important levels are for the next retest? Yes, that 4265 is, but we're also going to want to mark these other emerging candles. So you have extra levels of S&R. And no, they're not made up. These are amazing levels. You're marking the tops of your buyers from left to right like a book. So now you know you have really good levels down here to retrace to. That's why you saw me have all those levels. So right now you have lowering volume going into these bigger supports. Let's see what Nasdaq looks like. And I won't go through the same or maybe I will. Why not? Here's that common resistance. Let's find our shoulders. What did I teach y'all? Resistance turned support, bigger level. So you got your initial breakout, making that new high. Price came back down, retested that level, and ended up pushing back up. Let's mark that shoulder. Got another one here with kind of a, not a rectangle, it's more out of a kind of a squeeze to it than anything. But on top of that level at 14,900, then ended up pushing up and making that new all-time high. Price has now exited this topside range and is exiting into the next staircase down, this further staircase. So let's mark these other levels of emerging candles. And then you'll see you'll have plenty of levels to go off of when you're on these time frames. A lot of the time I like to go down to the 30-day, 30-minute as well. This shows the last month of time. And you can grab another level. See, like right there, I couldn't have seen that level. There's a good level there that was caught on support. Used here, but then also caught on support again. So it was two different 80% entries for two different directions. That 14665 is a huge level, so I want to keep that marked. And then there's probably another level about right here. As you can see, there's a good bunch of jump roping right there. I'm just trying to get all into the video though. But just breaking down sectors again, this is going to give you all the effective levels you need. You just have to be patient and prepare each day. Now, let's go through the other sectors. So XLK makes up for about 23 to 27% of the entire market. This is tech. As you can see, tech is breaking lower, moving down towards these supports, right? Where are they at on the smaller time frames? At 151. Okay, so they're on top of this level right now. Okay, if they end up breaking that level, yes, you can expect that further retracement. Let's look at XLV. This is healthcare. They make up for about 13 to 15% of the market. So just between those two indexes we just checked, ETFs, we've now seen about 40% of the market. That's pretty crazy to think about. That was super loud. But as you can see, at the levels we were watching was this range up here above the midpoint of the breakout range, the high of the range, and the bottom of the range before it made the next staircase up. So is it going to make that 80% retest? Let's see. No, it is below that. So you want to see a buy reaction above that for that to retrace. Below pre-market low, you can aim for, guess what? Other emerging candles, other gap ranges that have been formed recently. So under that level, you have amazing targets to look forward to. 133.20, 132.90, the previous day levels over here. So you have plenty of price action to look at. But just between those two sectors, you've already now analyzed 40% of the market. Communication sector. And let's say you're someone who doesn't know what is in this sector. Click this Analyze tab. You can type in SPY. And you can see how much each sector takes up the S&P 500. Then let's say, what was it, communication? Then you can see what is in each sector and how much it fills up that sector. So you can see Facebook, Google, Goog, Comcast. A lot of these are looking really, really good inside of this sector. So now you can see how to break it down further. But as you can see, communications breaking lower, moving back down to their shoulders. XLY had a bearish kicker under its 9 SMA and looks like it wants to make a new low. So now you know under this 174.90s that you can short just about any consumer discretionary. What are the top two consumer discretionaries? Amazon and Tesla. Then you have Home Depot, Nike, McDonald's, Starbucks. So tons of stuff to go off of there. So please don't set yourself up for failure. Zoom in, hone in, and focus on a lot of these sectors. Set them up, learn about what is in each sector. But let's look at the important levels for the staple sector, the flight to safety. When the market is not looking very well, you'll most likely get a pop in buyers right before we get a market retest. Guess what we just got? A pop in buyers on staple companies before the retest on the whole market. What is in the staples companies? PG, KO, Pepsi, Walmart, Costco. Companies that can last or withstand or sell products and still move forward no matter what state our economy is in. So that's why staple companies are very important to watch. Another area to go towards are going to be your healthcare and your financials. These are other areas people move to whenever tech is not looking as hot. As you can see, financials are not looking too hot. They are also breaking below their nines. But as you can see, bigger important staircase levels. What is this at 38.50? Very common resistance. You have another one here that was trying to be utilized as an 80% retest, right? So that 38 is pretty important. If we break below that, we're most likely going to move lower down towards this gap range and further emerging candles, right? Let's mark that gap range. And as you can see, we are in that range right now, holding support. So below 37, we break lower. Above this 37.50s, we have a chance of recovering to fill this extended hours gap. Industrials all the way down, still holding good area. Let's see what they are at their bigger time frame. They're just now trying to break lower. So yes, you can start to look for these lower supports at 102s. Base materials, you can see. Basic materials, sorry. Let's mark this common level right here. And again, as you see, I'm always marking from left to right. It's always an emerging candle when I'm grabbing these levels. Left to right. Work with yourself. But it looks like below 83, 83.45 and 83 are going to be really good targets. Where are we at? We're below 83 flat. Wow. So as you can see, below 83, if we don't recover with a buy reaction to fill that extended hours gap for just a one-day buy reaction, then you are going to get the further drop over the next couple days to the 81.70s. Real estate, just now breaking its trend. Energy has been broken its trend and has been cascading down, trying to make new lows. So you're going to want to see under these lows here where we're going. As you can see, we're actually testing that level right now. And then last one, utilities. Utilities is still holding its uptrend, hasn't started its retracement yet. Let's see, what is in utilities, not scan. You have a lot of energy companies. You have AEP, D, Duke, and EE. So you have a lot of stuff to look at here. But I hope this video was helpful. You also have the Dow, your small caps. These are very important to watch. I was actually personally watching small caps yesterday to try and see if they're going to hold this very, very passive trendline support that I had to draw in the 4-hour. I did draw from very far wicks, and as you can see, we've well broken that. So now I'm going to see, are we going to break this common low right here at 210.65. So small caps will be breaking lower if they break that. If not, they will be holding, and will most likely be what kind of gives the market a stilt. So I hope this video was helpful, and I'll see you guys in the next one.